Hi everybody, it's Christian from Serene Education with the 4 Majors Notes update for the 26th of November 2012. I'd like to apologize up front for not having any video analysis up during the latter part of last week due to intermittent problems with our broadband. Unfortunately, being in Wales, we do have our issues out here. We've had some really bad weather the past couple days, as all of you guys know who are living in the UK. We've been battered by bad weather, and we felt, well, we've been a brunt of it as well. So unfortunately, we've had issues with our broadband. They have been fixed, and touch wood, let's see how long that remains. But otherwise, let's kick on. What happened on Friday? Well, according to the daily, a huge bullish engulfing candle. What did that do for the weekly chart? Nice indecisive week the prior week, and last week a nice bullish engulfing candle. Almost an evening star formation. We had a number of weeks of downside, almost a full month of negativity, and now we've had a correction, and quite a large correction. That correction, if I take the low here in July of this year to the current high that we've seen this year at September, you can quite clearly see taking us back up above that 23.6, which is above that all-important 12,900 mark. So as long as price stays above the 12,900, that should reflect quite positively on the daily, which should lead into positiveness on the CTC histogram, and most importantly, trading above all the moving averages, including that all-important institutional moving average. Now, I'll just bring the chart up so you guys can see. So we've had a lot of, as I mentioned, a full month of negativity, and now we've had a correction, and the correction has taken us higher over the past couple of weeks, and in doing so, breaking, as I mentioned, above that 1290 mark, which is the 23.6 fib retracement area on the chart. So above the 23.6, above all the moving averages, including the institution, things are looking good. We have had a slight consolidation now. We've had a consolidation now on the Asian session last night, and as long as that all remains above 1290, then it looks like we should see further continuation to the upside. Price has tested a prior swing. You can quite clearly see he has a noticeable prior consolidation area, and I just draw a trend line. You can see where price is trading now. So if anything, you could use the 1295 as a yardstick. It's a round number. Okay, 1295. Use that as a round number, a yardstick, and let's see if that can now be a little support area for price. As long as price can stay remain above that in support, then let's look to see if price can correct itself. So if you wanted to, you could either take the low here currently in November all the way to the current Friday's high, and then draw a fib retracement area and see how things are stacking up. So if you really wanted to, you could take that to that. There we go. 23.6 would take us back to 1290. As I mentioned, if it stays above 1290, then happy days. Let's look for it just to remain above all those moving averages and pick up some more steam along the way. So if you want to see that playing through on our intraday charts, here's our 4 hour. You can see higher swing, swing high, swing high, swing high. Doing so, moving, clearing above all the moving averages, and clearing above the institution moving average on our, which on our 4 hour, before we saw price breaking higher above that 1290, which constitutes to that 23.6 area as I mentioned, and now we are in clear space. Now we've had a slight consolidation now. So intraday, you can see the start of this little upside move, this little move to the upside. You can see the 23.6 was a slight support on the 4 hour, then we had the break lower, and now it's consolidated at 38.2, which is at 1295. Happy days. That's at 1295 I mentioned on the daily. So if it stays around the consolidated range at 1295, we get a nice bullish engulfing candle. That could be the momentum now for the next part as price moves higher, and we should see price moving towards that all-important top end. So if I draw an intermediate trend upside, oops, get this right, there we go. You can see it's quite an aggressive trend. The actual the move is very aggressive. This is at least a 70% angle on this. So a lot of momentum, guys. Let's see if we can continue that momentum to the upside. So very important, as I mentioned, for our candle, it's got to be a nice bullish engulfing candle to confirm that positiveness now coming through after this little consolidation. Now this consolidation would have been people taking profit from this move that we saw on Friday in particular, moving higher. So as long as that consolidation can stay above 1295 intraday, let's see if we can actually build on that, and if we can build on that, then we should be heading to all those highs to the upside. Here's my hourly entry candle, 1295. Let's just make a note of that. There we go. A lot of support through the hourly here on the 1295 since the Asian Open. Here, the Tokyo session, 2 o'clock AM, it's just been flatlining. In doing so, you can see the high here and it's making lower swings, which is intermediate on this time frame, indicates consolidation. As long as it stays above, if you can see all the moving averages are a lot of air in between each one of them, looking really good. It's got to remain. 1290 would be our long-term support. It's still positive. If it breaks, even breaks below 1295, it's still considered positive because it's still above that all-important 1290. Okay, so as long as it maintains above 1290 this week, then we should be looking for positives still to remain in flavor. If not, to get more momentum to the upside and a very short punch to the upside, we need to see that 1295 being a very strong support. You can see the last hourly candle, nice little hammer here on that support. Now we need to see a confirmation candle. If that's a genuine, solid buying sentiment candle here, the hammer on this support area here, we need to see a candle here, a bullish engulfing candle to complement that. So let's wait patiently for that indication. Sterling, okay. The week ending up higher on the weekly. You can quite clearly see we had an indecisive week the prior week. A lot of negativity. However, you can see the price has been making lower swings. If I take the highs of the wicks, you can see the last, we saw the month ago, we saw a nice, well, not a bearish engulfing, but a little pinch to the upside, almost a tweezer top here, moved lower, and now broken lower. So this has almost formed a lower swing. And if you're looking coming up from the coming off those highs at 16,300, if you look at where price is trading now, it's back above that 1600, which is a very important psychological round number. 1600 has played a part in trading over a long period of time for this particular chart, going way back to last year in particular. But you can quite clearly see what we're interested in is the hard right edge, and the past week has been very positive. And this constitutes to a morning star formation, and we want to see price now, and this morning star has now broken a nice little psychological round number 1600 here, and you can see price now has pulled back. As long as it maintains above 1600, guys, on our daily, then we want to see price building on that momentum. So a lot of upside movement recently to the underside and then punching higher on Friday. In doing so, taking us above the 1600, which has been a consolidation area, but also a psychological round number for traders. You'll find a lot of traders, it's far easier to work in round numbers than to work in decimal, to the decimal points. So if you think about it, if I take the actual body highs here, intraday, or take the wicks, it depends, you got to do the same. If you want to trade the wicks, make sure you choose the wicks. If you want to use the bodies, make sure you use bodies. So if I take the wicks over here, you can quite clearly see that price is still in this downtrend here, and as long as it stays above 1600, it's doing first part of that support, that positiveness. Nice bullish engulfing candle on Friday has shown us that positiveness. Now in doing so, it's taken us above our major support and resistance level in the shape of the 1600. It now needs to remain above that. So for the remainder of this week, okay, for the near term, 1600 is going to be our intraday support. And if prices continue to the upside, it needs to be trading above 1605. You can quite clearly see that price has actually failed now, 1605, and we've had a consolidation at that area. So intraday, 1600 has to be made note of, and there you go. You can see on my 4-hour chart intraday, I've got my black line, which is also the institution moving average at 1600. So you can see price pulling back. If you wanted to, you can take the start of this upside trend, here we go, to the current high on the 4-hour. You can quite clearly see the 23.6 has been a support recently. However, the last 4 hours has seen price dipping below the 23.6. The 4-hour candle that's in play right now is still forming. If that candle had to fail and close higher and in the next 4 hours closed lower than 22.6, then we should be targeting near term to the downside or back towards that 1600 level, which will be the 38.2, which will be also the institution moving average. So very important. We've got to see price on a 4-hour to maintain above 1602. If it fails to maintain above 1602, then price is going to continue falling to the downside. Yes, it's still looking positive. Don't get me wrong, the sentiment is still there. Everything's looking higher. However, we are likely to see a lot of the likelihood of price consolidating will be there because of the fact that we've seen a lot of upside movement, especially on Friday towards the end of the close. We saw a lot of rallying on the upside, so we could see price move. As long as it stays above 1600, that's the most important thing. You can actually trade to the downside intraday to that level, but as maintained 1600, long-term positiveness is still the governing factor. You can see here on the hourly a lot of positiveness, a couple hours of negativity, but you'll be trading into the institution moving average. So it would have been very stupid to take a short here into a major support and resistance level in the shape of the institution. Far better to wait for price to break below the institution and then take a short down to these levels. Yeah, that didn't materialize because price actually looked consolidative then, and we should have looked for a buying opportunity. Here, broken above 1600, look for that consolidation, wait patiently for that bullish engulfing candle. We need to see a confirmation candle. Okay, you can see quite clearly the hourly that's in play now has a lot of momentum. There we go, it's closed now and it's above the 12020, so great. As long as it maintains above the 16020, then we should look for price to rebound to the upside. Okay, very, very important. Price has got to maintain above 16020, near term to look positive. If it trades below 16020, then we should be shorting back into that 1600 range. On to the US dollar Swiss franc. Let's have a look at that weekly candle. Way bearish engulfing, really. You think of the consolidation the price has done over the past couple of months, and then we had a nice little break to the upside recently. We were thinking, well, US dollar is going to rally against the Swiss franc as long as it can maintain above 940. Wrong. What happened was price was unable to actually maintain those levels above 940 over the past couple of weeks. And what happened? We had an indecision candle the week before, and then last week that bearishness took hold and dragged price through that 940. The daily will give you a better picture. There we go. Start of November looking really, really positive as price headed higher, and in doing so testing price support and resistance level or fib retracement pullbacks. So I've took the high here in July to the low that we currently have in October. 23.6 actually dissected price at the 940 level. Price was maintaining above 940, headed towards that 38.2 fib retracement area quite comfortably, which happened to be price support and resistance. Happy days into that. A lot of indecision candles. We want to see a decision candle. A lot of sentiment to the downside, and sure enough, price reverted to the downside. Back towards that institution moving average, which happened to be the price support and resistance level here. And what happened was, we were looking to see price now after a breakout. You want to see a pullback. Price pulled back, and it failed to maintain a support here. A lot of negativity. Look at the candles as we head into the support. And by the time it actually gave us these negativity candles, it was trading below the institution, which is not a good sign. And sure enough, price broke through the 940, which happened to be price support. Now looking at resistance, and price has just fallen over the past couple of days. Wednesday, Thursday, and Friday, selling into price swing support here, broken high, and you can see price is now pulling back. But as long as it pulls back and finds resistance now intraday at 930, which is the underside of this price support here, then we've seen consolidation, with ultimately price looking to the downside, and we should be targeting that 920 mark for the foreseeable week. So as it stands now intraday, we want to see 930 as a resistance level. So if I can just get all this out the way, there we go. So 930 will be our resistance level intraday. There we go. I've made a note of it. You can do it in, you can either make it nice and strong. There we go. So I know at the moment now I should be looking for nothing more than shorting opportunities. Why? Because all my indicators are above price, which tells me it's negative. My template is telling me I should be looking for shorting opportunities, and you can see the sentiment is really negative. Price has fallen on Friday in particular towards our close. We've had a pullback now. As long as those pullbacks remain at the underside of 930, then I should be looking for nothing more than a bearish engulfing candle to confirm that this is now resistance, and price is going to bounce off the underside of resistance to the downside. And then I look for my entry, stop placement, and target 920. Or in this case, you can see price has hesitated before 920. Look at the 922 area as such, but to the downside nonetheless. Okay, so you can see the trends got steeper. The momentum has really got steeper over the past couple days, and that steepness is really shown on the chart. So trade it, be patient. Trading at the underside, we are pulling a pullback. You don't want to trade pullbacks, you want to trade continuations. So wait patiently for a nice hourly engulfing candle at the underside, and then look towards those areas to the downside to target on. Last pair of the day is US dollar Japanese yen. Let's have a look and see what's been happening with the US dollar. Still maintaining that momentum to the upside over the past couple of months, and you can see through October right through to where we're trading now, a lot of momentum to the upside. If I take a fib rejection area on this particular one, I can take the low here to the current consolidation area and the pullback. You can see that price is trading at 100%, and sure enough, that's what it would have done. This over here would have been our 100% would have been the target area of the initial move. So through October, where they're buying, they had a consolidation, and now the second stint of buying has moved 100% of the initial move. Okay, so now this area that price is trading at the moment now is why the reason we are seeing consolidation, because of that. So 23.6 on this chart is valid. We'd like to see price trying to maintain that. However, we are going to see a slight pullback because of the fact that price is trading at 100% of that extension. So if we take a note of it, mental note of it, we are going to see price pulling back on our daily. Let's have a look at the daily range, and sure enough, you can see quite clearly that Friday, very indecisive candle. Thursday, a spinning top at that 82.50, which happens to be a price support and resistance level at the 100% extension, as I mentioned. And sure enough, we are seeing a pullback. So the pullback, if you think about it, if I take the Fibonacci retracement from the start of this upside trend here, you can see that's the low of this up to the current high. 23.6 would be our first target, which is quite close at the 80, just below the 8200 mark. However, below that will be 38.2, the 50, all the way back to 61.8. So you could trade pullbacks. Just be aware of where the price support and resistance levels are on this particular one. You can quite clearly see we had a consolidation area here just above the 81.50 mark, so 81.70. So looking at 23.6, we're going to be starting a lot of consolidation here between the 23 and the 81.70 mark because of the fact that there was prior consolidation here. So with the momentum, the shorter the pullback, the more momentum is telling you that there's still in this trade to the upside. The further back this pullback happens, the less momentum there is to the upside, and sure enough, we're going to see a long-term correction on this particular chart. So remember that if price pulls back and only gets to 20.6 and finds support and then starts moving higher, then we know that the momentum that initially started this move to the upside recently is genuine, and we should see US dollar still climbing against the yen. However, if this pullback finds that price breaks below the 23.6, gets towards the 38, and the lower it gets, it means there's less volume or momentum in this to really push it higher. And if it's going to do that, then you're going to find the consolidative range is going to happen that much longer. So remember that. 23.6, we don't want to see price trading below 81.70. So in this area here, as long as price maintains above this area here short term, then this is just going to be a consolidation after this upside movement, and that's profit taking, and then we should see a stint for the first. But wait to see if we can get a nice confirmed bounce. So intraday, I want to make a note of that. 81.50. There we go, is my long-term support, and near-term support is going to be that area that is not too far off. So I take the lows over here to the current high, and you can see the 23.6 is not too far off, guys. You can see that we are breaking through the prior support and resistance level. Price is trading. Remember, this wire candle has not closed yet. Okay, so there's a lot of momentum. You can see a lot of negativity at the start of last night on the market, and in doing so, price has now formed a swing low. Okay, and as it stands now, we are in a consolidation pattern. So 23.6 would be first target, quite close to 50%. If it stays above, we could see price reverting towards that 38.2, which would be around the 81.50 mark. That's as far as it can go. If it drops lower than that, then you know that sentiment is genuinely not behind this upside move that we've seen recently, and price is just going to fall even further. And that could go all the way back towards that 80 mark, which happens to be our major long-term support and resistance level here at the 80 mark. Okay, so you can see quite clearly how prices, I've taken in note of long-term support and resistance levels at the 81.50, which is our consolidation area on my weekly and daily, and then my intraday charts are looking at looking for pullbacks. You can see this is the start of a trend. It's moved higher. Now we've had a correction, so I can take the low here to the current high, and this would have been the start of the trend up. So this movement here is 100%, and now the move higher, we want to see this to here has been 100% of this initial move. So you can see swing, pullback, swing. Okay, so that's cancelled now. 100% is reached, so you're going to find people taking profit now because people will traded that particular template or this fib projection point. And it's imperative now near term that if this momentum here that we're seeing over the past couple of months is genuine, then the momentum needs to remain positive. The further back price falls, the further these areas of these fib retracement areas are broken or breached, that means that the sentiment is now waning long term. And that means that the sentiment is looking generally negative for the foreseeable future. So then we could target these areas to the downside towards or back towards that 80%. If we find support here at 23.6, then we know it's positive support, and we should be heading back up towards these areas here, just below the 8300, and then back up towards the all important 8400, which I mentioned is our long-term support and resistance level on the weekly charts. So there we go, intraday charts. I can get rid of all these figures now. New week, get rid of my trend lines. 80, draw a nice big mark around the 80 mark, so drag us down to 80. That'll be my long-term target. The price continues to fall. I've got my lows here. You can quite clearly see here's a start, and then we saw a lot of buying through here. So take the low to the current high intraday. You can see 23.6 is in play right now. You can see my intermediate trends are above price, which is negative. Lower swings, you can see an evening star formation here. Up, indecision, decision, evening star. The start of this downside movement last night, an Asian session, Tokyo Open, bang. And now we've headed towards that 81.90. Get below 80, this 23.6. Then we should be targeting the institution, but all importantly back towards that 81.40 mark, which happens to be a price support and resistance level. As I mentioned, if it fails to hug these higher ends and the longer it falls, it means that there's less sentiment, genuine positive sentiment or momentum behind the move. And if there's not a lot of momentum holding this up, that means that people are starting to pull out of this a lot more, which means that there's more selling contracts being taken up, which means that price is going to keep falling. And it can keep falling all the way back below or towards the 80 mark, because that's where we've come from. That's the break that we've seen recently. So that's the way I trade intraday, guys. Take the current low to the current high, or from the current high to the current low. See where the momentum is. The momentum is upside. However, the more of these fib retracement areas she breaks, the less momentum there is, in this case, the upside. And if that's the case, then we're going to start seeing price rolling over. Swing high. We've had the swing high being broken now. Pull back, and now we've seen price moving in the opposite direction. Is this the start of intermediate negativity on this particular pair? If it is, look to see if you can trade it to the downside. If it isn't, look to see if you can find a trade on the correction. Hope you have a fantastic trading day. Please look at the news. Eurogroup meetings are still in play, guys. They've been having these meetings all week, well, midweek last week, and still the deciding factor is still going to be Greece, Spain, Portugal. Those particular ones, Italy, those are all going to be pretty much on the minds of everybody that will be attending these meetings. Greece in particular is a major one that they're all looking to work hard. However, there's not another chief unemployment or employment figures for the European market this morning. This afternoon at 12, we have the German consumer climate. Other than that, not much else. So you're going to find a lot of people will be looking at the Eurogroup meetings to see what other news comes out of that. So be aware of it. The longer that we have problems with Greece, the more likely is we're going to start seeing that negativity on the chart. So look for what's happening. Look for those candlesticks to depict that sentiment, and then trade it. Otherwise, keep it simple. Follow the rules. Back it up with sound money management, and you shall find yourself being a lot more profitable. Otherwise, have a good day. I'll see you tomorrow morning. Trade serenely.